All right, I think we just went live here. So if you can hear me, let me know. There we go. Rocky, hello. Aladdin, hello. What are your options? The trading den. Thank you for smashing the like button. Thank you, everybody. I think more people are going to be jumping in here in just a second. Let me see. All right. I don't see the counter for how many people are here. But either way, okay. So I don't see the counter that says how many of you are here, but I'm assuming there's some people here. All right. Let me just check something really quickly here. Where do you see that? I don't see that anywhere on my screen. But either way, it doesn't matter. All right, let's give it another minute and then we'll start to go. All right. All right, folks, let's just get started here. Ah, yes, you're watching on YouTube. That's why. I forgot I could look at that on YouTube. Thank you. All right. So let's go ahead and get started, folks. So first of all, please be sure to subscribe to our channel, smash the like button. That greatly helps us. We are live here for Market Minds. I am Mike Patton. I am the head coach at Funder Trading. You can see that in the background. And looking forward to talking with you folks about the markets, answering your questions, etc. That being said, let me just go a little bit into myself just so you know who I am. So I started my career in trading in 2005. Okay, so this was quite a while ago. I started trading actually in 2004, but I finally decided it was time to move up, and I got a job as a trader in 2005 doing commodities. Okay, that's what we were focusing on. Basically, I was doing trades where I would give a trading recommendation to clients and then place trades in commodities. The first trade was an unleaded gasoline options, and then after that, I think it was silver, then gold, and then it just kept going. Natural gas was horrible, by the way. lost badly on that one. Now, after that, I got into proprietary trading in 2014. The difference is prop trading is where you're just trading capital provided to you. You're not really interacting with clients. There are no clients. It's just you're trading the money on behalf of a firm. Got into that in 2014. So I was already 8 years, or actually more than that, 9 years into trading at that point. But I had to switch over to trading stocks. Okay, so I had never traded stocks before. It was quite an experience and difference, but that's where I ended up going. I became, in the interim between those points, I became a coach for Prosper Trading Academy for stocks and options. But I didn't really, like I said, it was mostly options. And then later I got into stocks afterwards, I should say. So when I started prop trading, I was pretty new at stocks, but I was doing options before. And then after that, I started doing stocks coaching for Prosper as well. And then after that, just continued to trade for a couple of companies. Great Point Capital was one. Global Prime was another. And currently, I trade with a group of professional proprietary traders and also some other traders in a personal group as well. All right, so just give me a quick rundown of who I am. Now, that all being said, let's move forward to the rapid fire, folks. So this is where you get to ask questions. But before we jump into that, let me just tell you a little bit about the markets, what we're seeing right now. So looking at the market today, sorry, I have to look off the screen here so I can see my charts. But we've got the QQQ ETF. We're currently up 0.35% for today. Now, if you noticed, over the last several days, the SPY, the Dow, and the Russell have outperformed the NASDAQ. But today, we actually have the NASDAQ outperforming all of them. What I mean by that is, relatively speaking, for the last 2 days, the NASDAQ was greatly underperforming. In fact, I remember a couple of days ago, the Dow was going up, but we had the NASDAQ basically going down. Usually the markets move in sync. The Russell usually is the one that is least likely to do everything the same. but usually the Dow and S&P and the NASDAQ usually go the same way every day, but they were not doing so much the last few days. Obviously, you've seen a lot of earnings come out for different stocks that were not so good that are inside of the NASDAQ, so that's part of the reason why. All right, now, as far as it goes, guys, let's go ahead with the rapid fire, and we'll go from there. So let me talk a little bit about some of the stocks that I'm looking at first today, and then we could talk about anything else that you guys may have in mind. So today, the big winner was Tesla. And if you don't mind, folks, let me do something really quickly here. Let me pull up my charts. Where'd it go? Where did my charts go? Here's one. Okay, let's pull up this chart. And let's pull up Tesla. And I'm not sure if you guys are seeing that screen, so hold on for 1 second. Let me stop that and restart it. Because I didn't do entire screen. There we go. All right, you should see a chart appearing now, right? You guys see it? Everybody see it? That's Tesla today. Okay. INTC did have bad earnings, you're right. All right, so for today, Tesla had a pretty strong move up. Now, for those of you who are in, well, for those who are in our program for, our prop traders, we don't really focus as much on fundamentals. I'm not saying fundamentals don't matter. They really do. But when you're dealing with intraday timeframes, unless it's really breaking news that it's extreme importance, usually you don't get consistent follow through intraday. So I'm not trying to give any reasons why Tesla should be up. We can come up with reasons. One of them could be we look at the fact that they mentioned, for example, on their earnings call that they're going to be introducing some less expensive models coming up, which would make them much more competitive. Obviously, Tesla has a massive advantage in the US market, but nevertheless, Tesla had a really nice run today. We had to wait a little while, but we basically were able to catch the move right around here, right about there. Let's go over why. Okay. The reason why we waited so long is because at the beginning, you can kind of see it wasn't trading as consistently as we would want. Now, obviously, you can take advantage of that, but I don't like to trade when things don't seem to be pushing very strongly. There were some key levels that needed to be breached. We knew which levels those were. Once we got through them, then it became kind of off to the races. So we had a pretty nice setup here. Usually what I'm looking for is what I like to call the move, pullback, and resumption, which is this move, pullback, and resumption, right? So basically move up, then comes back a little bit, then moves up. These are Bollinger Bands, by the way, set at 1 standard deviation, nothing special, 21 periods, and it's a simple moving average. It's nothing special in the middle, okay? Down here is the VWAP, your standard VWAP, nothing special there. And these lines represent, this is down here, the previous session's closed, the red line, and this line right there is the current session's open. So that's yesterday's close, as I like to call YC, today's open TO, and that's the gap right there between these two, okay? Now, basically all we did is we went up to the previous day's open for a second, we hit that, came back down, went through it again, bounced off of it, and finally got on a run. There was some major resistance up here that we saw on the order book. Lots of sellers were sitting there, but we were able to break through. I can show you in a second how I knew where the sellers were, if any of you are interested in knowing how we knew that. But nevertheless, once it was able to break through, we pretty much had a nice clean run that went up past the expectations. We set a target today for Tesla to hit 321.87. It reached a high of 323.63. So not too bad. Okay. All right. Now, we also looked at other stocks. So I'm not going to say that everything worked out the way we wanted. We also looked at Rivian, which did actually work out okay. So let's talk about Rivian. Now, Rivian had a decent move up. We were projecting it could get to 1469, but it did not. We had to look at this a little late because you can see that the beginning of the day, it's a little choppy, not that smooth. But then over here starts to really break out. And we noticed that one of the traders that we have in the proprietary trading program, they noticed this one was going up, so they alerted me to that. We had seen it earlier, so we were able to catch the bigger break here. However, it didn't really go far. It went up to 1447, so it fell about 22 cents short of where we were looking for it to go. And then using our standard methodology, when it starts to break to the other side of the channel, that's where we get out. So far, it hasn't resumed any upward movement. It's just broken down. So this one didn't really do exactly what we wanted. And let's go and look at one more. Now, we were looking for a potential short opportunity for Riot blockchain. Okay. Early in the session, we saw some weakness in a lot of the crypto names like Mara, right? I'll go over that in a second. Good question, Robert. I do not use his algorithms because he hasn't built them out for stocks, so I can't use them. He only has built them out for futures. But Dan is a really smart trader. And what he's doing is really good. So I'm glad you're a part of that if you are. So here's a downward trend that started today, but as I mentioned, we didn't really see any continuity. So what we were looking for is we had a target, which I call T1, which is at 1392. So we got down to 1392, but then as soon as we got there, it didn't go any farther. It just bounced and went right back up. So unfortunately, what we were looking for, remember, is we want to see the move, pullback, and then resumption. So we got the pullback, but it never resumed the move down. It just kept going back up. So we had some winners, some losers, and a lot of stocks that never did anything at all. They just basically started to move and stopped today. But Tesla was a really good one. Another really good one today was Robinhood. Good question. Now, the targets are based on the algorithm. So just like Dan, Kevin, has his algorithm that he uses, I've created my own to project targets. So the targets that I have are based on an algorithm that I created. And what I basically do is I share that information with everyone in my coaching room so they can see exactly where those targets are. The targets are based on a lot of data, just like Dan, but it's different. He looks at slightly different information that would be more relevant to futures. I look at slightly different information that's better for stocks. Okay, so you do have to look at slightly different things. There's some similarities, but there are also some differences. Also, as you notice, mine is designed to project how far something might go. So for this one, the projection was 107.21. We topped out at 106.39, but it was a really nice run. It just broke down when we got to this section over here. So by my approach, this is where that's the end of the trade. So this stuff afterwards, we wouldn't chase after. I did mention to the room that it was possible we could get another setup, but what we would need is for the stock to basically go very tightly for a while and then do like this. So we would have a nice level place to put a stop loss underneath. So if it didn't keep going, we would just get stopped out right there. But if it did keep going, we would have a good reward to risk where we have a lot more room to go to that target than we have risk. Okay. Now, one other thing I should show you, because you guys did ask, how do I figure out where that support and resistance is? Let me show you Tesla. How many of you use Thinkorswim, by the way? How many of you have an account with Thinkorswim? Yeah, no resumption, you got it. How many of you folks use Thinkorswim? Anybody? I'm sure a lot of people do. Any Thinkorswimmers? Okay. All right, let me show you something really quickly here. Okay. All right. I forgot there's a slight delay on the stream. If you say you wish, I'm guessing you're in Canada. All right, so here is my Thinkorswim, right? So here's my Thinkorswim. This on the screen is called Bookmap. Some of you probably have heard of this before. Bookmap is an actual company. Oh, okay, I got you, Kevin. All right, so Bookmap is an actual company, and this company has been offering a service where they show you what's called a heat map. The heat map is this thing in the background, these lines that you see here. what these are offers. If they're above the white line is the last traded price. So if the horizontal line is above the white line, it means it's an offer above. And if it's a line underneath, it's a bid. Okay. So what this is actually is real support and resistance. In other words, you don't have to guess at where support and resistance is. You can actually see it. So pending orders, including orders that are like icebergs and things like that, you can actually see, right? Yes, it does, Robert. It's fantastic. Now, Bookmap is available on Thinkorswim for about $40 a month, just under that. You can get Bookmap outside of it, but it's going to cost you a lot more. So I would go with that. It's also easier to use when it's integrated into the software. But what I use it for is when I was starting out in prop trading, I used to ask, how do you figure out where to target? Like, how do you know where a stock might top out or bottom out, or how do you really figure out where support and resistance is? Now, there are multiple methods people use. Some people use volume profiles where they look at past activity, but I would always wonder, what about the things that haven't happened yet? In other words, if a stock is at all-time highs, which is often the case, or near all-time highs, what if the stock hasn't done much in that area? How do you figure out where the sellers or buyers are? Well, that's where this comes in. So you can see pending orders before they're reached, and you can see what size they are. In other words, these numbers over here tell me that, for example, this line here is 164,000 shares waiting to buy for Tesla at the price approximately 310. So I know that if Tesla comes down to 310, there's a good chance this order is going to slow it down, right? It may bounce off this and then go back through, or it may bounce and reverse. But either way, since I know it's coming up, I can be prepared. So as I like to say, it's nice to not run into the wall that you didn't see coming. It's nice to know the wall's coming up before you hit it, right? Right? There are pending orders waiting to fill. That's right. This is not past. These are future. This is something that may happen. These are orders that are already there. And if the market were to go to them, then it will interact with those orders and either buy through them or sell through them, depending on which direction we're going. So what I mentioned about Tesla, if you look here, that was the level that was slowing it down, and that was roughly at 315. So at the earlier stages of a day where you see this line, think of it like it's like if you look at like a seismograph, for earthquakes, where you see that line is being drawn out until it stops, right? So essentially, until this level is eliminated, you do not see that line end. As long as those orders are still there, you look at the time below and you can see that, okay, that line existed close to 11 a.m. It existed at 10 a.m. Eastern. It started at about 9:30 a.m. Eastern. So that's where it's existed. And then once we get to that line, right, if there are enough buyers to get through it, they'll take the order out. So think of it like a big block of something on a shelf at a supermarket, and some big buyer comes in and says, I want everything on that shelf. And they say, okay, here it is. And now the shelf is empty, right? That's exactly what happened here. The inventory was there. It's waiting for someone to buy it. Someone comes in with a big order, or someone's come in. Maybe it's multiple entities that come in with a big order. They take the level out, and then you move on. So once we saw this level break, we waited for a characteristic pullback and resumption of the trend up, which did happen right around here. Now, I specifically told everyone to wait until we passed the price 316.50. Exactly. Move to the next shelf. Kevin, you got it. You're right on point. Right on point. So what Kevin just said is precisely what we're looking for. They moved everything off of one shelf. If the buyers still look like they're buying, then we want to look for the next shelf. You're absolutely right. So in short, once it was clear that the stock started to accelerate, right? That's what we're looking for. We're looking for it to suddenly shoot up after it cleared that resistance. As soon as we saw that, we knew that that should happen somewhere around, I think the price was it was 317.50, I think. Sorry. But either way, actually, I can look where my alert was. I think it was, yeah, I think that was it. Anyway, it broke out. Actually, I can look on my phone. Hold on. What was that alert? Hold on for a second. It was for because I set it to show on my phone. Hold on. It was at where is that alert? Okay, I don't see it right now, but it's in there somewhere. But I know it was a 50, something 50. So anyway, it occurred right here. Either way, right? So once that occurred, let me get my cursor on there. I can figure out where that was. That was at, yeah, it was 317.50. I was right. So once it hit 317.50, right? That's where we're looking for the breakaway. You should. It's a great tool. And then once that happened, we're looking for it to move to the next level. But we had a projection for a move up beyond that next level. But I warned everyone that once we get to here, if the stock looks like it's struggling to get through, it just can't pass through it. It's just pushing against it and it's just wavering and struggling. And okay, if that's the case, then bail out. But if it's able to pass through without much difficulty, stay where it was at and then continue to advance. Stay with it until it's at least at the target. And the target was 321.87, which was right about there. Sorry, right about there. Okay, so it did get to that target, went slightly past it, and now it's collapsed. Now, this is normal stuff, by the way. Those targets usually, yeah, Funder, exactly. Funder Trading. These targets, that's the company for me. So the targets usually are going to get hit, and then we go from there. Okay. All right. All makes sense, guys? All right. That's the word of the day? Ah, okay. Didn't know that. Sorry. All right, folks. Now, let's move on. Okay. Now, I don't want to keep going about this stuff. I just want to give you guys a chance to talk about other stocks. So if you got some other stocks you're interested in what's been going on recently, let me know. That's right, Rocky. I don't usually do this. Usually when I'm doing it, it's me and Scott Bauer. So I usually forget how the format goes. So sorry about that. TSM? Sure, let's take a look at it. I saw INTC earlier as well, so I'll make sure I pull that one up. I sometimes trade SPX, but not very often. Okay, sometimes, but not very often. I don't have anything against it. Just normally doesn't have much of a value to me. If you're doing like more sophisticated options, I can see. All right, here we go. So we move up. Now, I want to point something out that I didn't emphasize. You see this down here? Okay, you guys see that down there? What that is called the CVD. It's the cumulative volume difference. What it is every time you buy at the offer, your order is going to be added to the total of buys. Every time you sell at a bid, your order is going to be added to the total of sells. So it's looking at the number of shares. Basically, if there's more buying of shares at the offer than there is selling of shares at bids, then this line goes up. So what this is basically telling us is that there was more buying activity overall than selling. It doesn't mean necessarily the stock's going to go up. However, the larger this number gets, the faster the stock is going to move up. Okay. So with that being said, we hit this level, we hit that level, we hit that level, and then we got to the last one right here, and that was the straw that broke the camel's back. And you can see they're building up that level once again. Now, if you're in TSM right now, that's the level you need to be watching because that's where they're basically blocking the stock. Now, we could also do something else. I can look and see not just what's nearby, I can also see what's farther away. So let's take a look at that. I'm just going to scrunch this down. And here's what I can tell you. All the orders are concentrated in a pretty narrow area. Nothing abnormal there. But it looks like all the interest in selling goes up to 250. Now, here's a good thing to know. One of the nice things about the market is that traders have to go in the direction of where the liquidity is. In other words, if big traders are going to make big trades, they got to go in the direction of where the trading is. So if someone wants to buy and they want to buy a lot of shares, they can't buy it from a small fry. They got to buy it from someone or some ones who have a lot of shares to sell, right? So for that reason, most likely the bias is going to move this stock in the positive direction. It doesn't guarantee it. These levels, they appear and then they disappear. So in other words, every day, if you keep track of where these levels have been and you notice that they're persistently in the same place, that's the market basically communicating to you that they are convinced that the stock could actually go there. If those levels exist for a short amount of time and then they disappear, the exact opposite. Okay. Most stocks will have some levels above and below. This one seems to be all above. So that means that these are places in the future, maybe in the next few days, not likely today, that would be a pretty big move, but maybe in the next few days or so, if this continues to show bullish action, pay attention to where these levels were. So what I used to do when I was at Great Point Capital, and what I still do if I'm looking at a longer term trade, is I will draw on my chart where these levels are, and I'll note how many shares have been there. And every time I see a change, I just update the number of shares. And if those levels disappear, then I just delete it from my chart so I know that's no longer there. NVIDIA, before it split, had a massive level at 1,000. And then once it went through there, everything kind of took off. So these things actually are very important to note. Unfortunately, a lot of people don't know about this. So therefore, they don't have enough information, I guess. Okay. Let me show you Tesla, INTC, because one of you asked about that earlier. Let's look at that. Now, of course, INTC had earnings. Obviously, it didn't work out too well. All right. Where is INTC right now? Let me see. That is currently at 20.45 and falling. Sorry. Just had a spam call come in. And yesterday, earnings came out. Let's see. They missed on earnings. Did they not? Yep. Well, actually, no, they came out about the same as the estimate, but their forward guidance obviously was not so good. All right, so let's take a look at this. So here's INTC, and let's see what we got. Give me 1 second. Just loading up the data. So since I'm doing this in the middle of the day, Bookmap, when you start at the beginning of the day, it's going to start with all the data from the open. But when you start in the middle of the day, it's missing some data. Okay. This is exactly the picture we should have expected to see. So I want you to look at this, okay? Look at the profile. Remember what I mentioned about where the liquidity is, where the orders are? This is the order above at 21, but look at where most of the orders are. In fact, pay very close attention to that order at 20. That's 1 million shares waiting to buy at the price 20. So make sure, everybody, if you're going to be looking at this stock over the next week or so, you better make sure you draw a line on your chart at the price 20. Make sure it's there. You don't want to forget that level because it's obviously a big number. Okay? All right. That's a very, very big number. Okay? Now, down below here at 19, you got, well, unfortunately, David, it's over for the word of the day. So down below, you can see that there's been lots of selling today. Okay, so it's pretty obvious people who own this stock are not so interested in keeping it. It's actually down nearly 10% today. Okay, now, folks, here's the deal. If a stock is down 10%, there's a rule called Reg SHO. It's the basically it's a variation of the old uptick rule, and what it basically says is this: if a stock is down 10% for the day, short sellers are not allowed to sell at the bid. They basically discontinue that operation, and if you want to short sell, you got to sell on the offer. The idea is to make it harder for a stock to be forced down deliberately by short sellers. So since INTC actually hit 20% down was 20.37, the low was 20.39. So those buyers are actually waiting down there. You can actually see them on the chart. That's what we're seeing right here. They're buyers that have been sitting there waiting for that, waiting to buy in. Now, you also have some buyers down below that are hoping it gets down to 20, and it could do that. So make sure you're paying attention. We took out this level here, but we still got a bigger one down below. And if I scroll down some more, I see there's a level at 19, a level at 18. But if you look at this picture now that I've scrunched it together, you can clearly see that most of the action, most of the orders are to the negative side. So basically what we can conclude is that as far as the market is concerned, at least for today, 18 bucks is about as low as they're projecting the stock might go based on where the orders are resting. And the $20 level is clearly a major level. It's where a lot of buyers really want to buy. So we can see that as a good value point. Now, obviously sentiment could change over the days, but if we look day after day at this display and we notice that there's consistently orders sitting there and they keep sitting at the same level, just like I saw for NVIDIA over a year ago, right? If that's what I'm seeing, then that basically means that's the place. That's the place where the market is targeting. And as long as that order is there, it's still looking for it to get there. And if that order suddenly disappears and all the orders suddenly appear at the top and they persist, that means that sentiment shifted. Now people are thinking to sell above. Kevin, it's called the CVD, cumulative volume difference. This is saying that today there were 4,200,000 more shares sold at the bid for INTC than purchased at the offer. Okay. And this is showing that the trajectory of that was pretty smooth. All right. Good job. Good job. All right. I know I'm rushing through this, folks, but I want to make sure I give you guys enough information. Any other stocks that you want to look at here? All right, FFIAI. Okay, let's take a look at that. We're going to do this one last stock, and then we're going to have to wrap up. I'm going to spin the wheel to see who won. All right, that part I know. I'm going to have to stop it at FFAI, unfortunately. But let me check this out, see what we got. Ooh. All right, so clearly a selling day. 1 million more shares sold and purchased. The stock fell very sharply. All right. Honestly, this one looks like you have a split market. It doesn't seem like it's one side or the other. So my opinion would be, if you are looking to buy the stock on the lower end, if you're looking to buy the stock on the lower end, probably you can buy it down to 250 if you really are patient enough. Okay. Remember, nothing guarantees the stock's going to get there. It's just saying this is where the market sentiment is right now. Right now, we're stuck at between about 270 and 290. That's where a large concentration of orders are sitting. And then up above, you see where the resistance is most concentrated, around 350. So between 350 and about 290 is the range that we look like we're sandwiched in. But eventually, once the picture becomes clear, we should see a more, it should be more obvious that we'll have a lot more levels above if it's bullish, or a lot more levels below if it's bearish. Yep. All right. All right, folks, I got to spin the wheel here. So let's wrap it up for today. And I definitely appreciate everyone joining in. So let me spin the wheel and see what it says. Okay, ready? I guess I should put this on the screen. Okay. Hold on. We got John. Congratulations, John. You have won. You're going to get some cool merch if you prefer. All right. All right, guys. So John is the winner. I'll just make a note of that here. Winner, winner. There you go. Hey, congratulations, my friend. Congratulations. All right, folks. I really enjoyed this. Looking forward to doing it again. Yep. Email prosperswag@prospertrading.com. All right. Just email us, please. prosperswag@prospertrading.com, please. Just email us, John, and we'll get your lovely swag over and we'll go from there. Okay. Well, listen, folks, I really appreciate everyone taking the time. Let me just show you one more thing before we go. Okay. All right. So if any of you are interested in this, let me just give you a quick rundown of the program. Okay. And obviously, I don't want to spend much time on this. So we are giving you an opportunity. Funder Trading, my company, is giving you an opportunity to get funded with $250,000 to trade stocks or options. Okay. This is a real opportunity. And we just had a great webinar last night where a lot of people were able to get started with us. So I really would like you guys to be able to be part of that. Okay. So this allows you to basically get into the program. You have to go through what's called an evaluation stage where you're going to demonstrate your trading acumen. We will give you lots of resources. You saw me going over Bookmap. Everything I talked about today, this is what I did live in the coaching room for this program. So when you're in that program, I'm going to be showing you those opportunities just like we did today. I'll be looking at Bookmap and analyzing what we see. You guys will point out opportunities that you see. And just like we did today, I'm going to give you some great information about it. Okay. Now, you definitely want to check out that webinar. You see the link there, webinar, https bit.ly. Anyway, it's here. I think I should retype that, but just get the HTTPS part, I believe, right? That's the, or does it have to be the whole thing? Just asking the support team, right? But anyway, once you go, you can watch that recording of the webinar. It'll go through the full details. Thank you. It'll go through the full details of how this works. I definitely want you guys to watch that replay. You'll see me going over all the details. And if you have questions about it right now, you want to talk to us, is there a number they can call right now if they have any questions they want to get immediately about this program, folks? If so, let me know in the chat. Okay, well, I guess not. So you'll have to watch the webinar. All right, so just watch that webinar, folks. That'll give you all the information you need to know. All right. And then after that, check it out. Hopefully some of you will be able to take part in that and go from there. All right. And remember, it's Funder. Funder Trading is was the word of the day, of course. All right, folks, I really appreciate the time. I'll leave this up on the screen for a second, and then we're going to end in about 10 seconds. But folks, thank you again for joining. Really appreciate the opportunity to show you guys how everything works. And of course, we'll go from there, okay? Take care, folks.